Good afternoon, traders. So the global markets remain on edge after a volatile overnight session. Gold snapped a 4-day losing streak, breathing touchily 33.30 before settling at 33.27, which is up 0.35%. However, it still faces strong headwinds. Technicals shows price struggling below the lower boundary of a bullish flag, with resistance clustering around the 33.42 to 33.45 zone. A drop below 33.08 could trigger further downside towards 33.02 and even lower to 32.47, while bulls need a breakout above 33.34 to shift sentiment. And silver remained relatively quiet, closing slightly higher at 38.17. And trade tensions dominated the headlines. President Trump threatened more tariff on Russia if no Ukraine ceasefire occurs with 10 days and signaled upcoming policies targeting to pharmaceutical sector. And the EU plans to buy 40 billion worth of AI chips under a deal with the US. And Mexico seeks a tariff agreement this week, while India may face 20 to 25% US tariff, though a trade pact is expected by early autumn. On the monetary front, all eyes are on the Fed's upcoming decision. With only 11 voting members due to the board member Kugler's absence, the Fed's unofficial messenger hinted that while future rate cuts are likely, no action is expected this week. And meanwhile, the US job openings fell to 7.44 million in June, signaling softening labor demand. And in currencies, the euro remains weak near the lower handle, which is a 1.15. Despite a slight oversold bounce, the broader trend remains bearish, and the near-term support lies at 1.15 and 1.1450, with resistance at 1.1622 and 1.1654. And lastly, oil is gaining momentum. The US crude break above 69.98, reclaiming the 200-day moving average, and is now targeting 71.73 with a resistance at 71.84. A weekly close at this level would be strongest in 6 weeks, supporting a bullish continuation. So the markets remain on alert as traders find clarity on the Fed's decision and the global negotiations. So this is all for today. Thanks for watching.